Welcome to the Inspired Podcast. Today we're really diving deep, like way down into the Federal Reserve.
Oh, yeah.
This is big stuff, right? Its
Yeah.
impact, on the American economy. It's everywhere. And to guide us, we've got a fantastic book, Lords of Easy Money.
Christopher Leonard, right?
That's the one. How the Federal Reserve, he says, broke the American economy.
A bold statement.
It is. But we're going beyond the book, too. We've got these awesome reviews from Hustle Mindset and the Gunfighter's Guide.
And don't forget those lively discussions on breaking banks.
Can't miss those. So why are we doing this? Well, for you, our listeners, you want to understand this financial world, right? But who needs all the jargon?
Exactly.
Today, we cut through it all, straight to the core arguments, the key insights from these sources. No fluff, just the stuff that matters. Ready to jump in.
Let's do it.
All right, so after 2008, remember the financial crisis.
Oh, how could we forget?
The Fed, they went for this easy money policy. It was a big shift.
And it makes sense. It's interesting how their tools for tackling these economic storms have evolved. They used to just focus on interest rates, right?
Right.
But post-2008, things got a bit more, unconventional. QE, quantitative easing, that's where they started buying all these long-term securities from banks.
It's like they were trying to flood the system with cash.
In a way, yeah. The goal was to basically kickstart the economy again. Lower interest rates, easier to borrow money, and boom, people are spending and investing again.
It's like priming a pump, right? A little water gets the flow going.
Perfect analogy. And you need that boost, especially after a massive shock like 2008. Everyone gets scared, businesses, people, they hold back, don't spend, don't invest.
Makes sense. But, and here's where it gets interesting.
Go on.
Our sources, they point out some potential downsides. Like Leonard, he argues that this easy money approach, it might have actually distorted the financial markets.
Interesting. Like unintended consequences.
Exactly. And maybe even encourage some, shall we say, overly risky behavior.
Okay, so where did all this money go? The breaking banks discussions, they really dig into this. It's not like the Fed was printing physical dollars and handing them out.
No, they were buying stuff, assets, mainly U.S. Treasury bonds and those mortgage-backed securities.
Right, from the banks.
And this is where it gets crucial for you, our listeners, because think about it. Did this cash really reach Main Street? Small businesses, everyday folks.
That's the question.
Breaking banks highlights how a lot of it actually stayed put right there on Wall Street.
The banks, flush with cash from the Fed, buying their assets, they were lending it out, low rates, of course.
Yeah.
And who were they lending to? Often big financial players, hedge funds, that sort of thing.
And what did those hedge funds do? They leveraged it, borrowed even more to amplify their bets. And where did those bets go? Stocks, some of the newer stuff like crypto.
Fascinating. So the intended recipients, maybe they didn't benefit as much as some folks on Wall Street.
That's what the sources are suggesting. And then there's this idea, the Fed put, that the Gunfighter's Guide brings up. It's like Wall Street started believing the Fed would always step in to stop any big drops in asset prices.
Like a safety net.
Exactly. You feel safer taking bigger risks, right?
And you think, if people start believing in that safety net too much.
Well, let's talk about the results, shall we? One big one. Asset prices went way up. Hustle Mindset points out how this easy money, combined with low rates, it might have fueled bubbles.
Bubbles, like in the stock market.
That's one. Real estate, too. And here's the thing. This doesn't help everyone equally.
Right. It's not like everyone owns a ton of stocks or property.
Exactly. Our sources all agree the wealthier folks, they benefited disproportionately.
And on the other side, the average worker.
Wages didn't grow at the same pace. Cost of living kept climbing, especially housing.
That's a recipe for inequality. And the Gunfighter's Guide, they have this striking visual. The Fed's balance sheet, it exploded. From about $900 billion in 2009 to a whopping $4.5 trillion by 2019.
And then post-COVID, it jumped even higher to $8.2 trillion.
Makes you wonder, are we sitting on a massive bubble that's about to burst?
It's a real concern. And that brings us to the big question. Did this easy money really deliver sustainable growth?
That's the crux of it. Hustle Mindset argues that it might have actually made the economy more fragile, susceptible to shocks.
Think about it. If rates are kept artificially low for too long,
people might be less inclined to save. And saving is what fuels long-term investment, the stuff that builds a strong foundation.
Right, so maybe we saw underinvestment in productive areas. And another concern, if the Fed's already used its big guns, near zero rates and all that asset buying.
What happens if a bigger crisis hits? What tools do they have left?
It's a thought-provoking point, and this is where history comes in. The Gunfighter's Guide reminds us of Thomas Hoenig.
Who was he?
He was a regional bank president, part of the FOMC, the folks who make the big decisions at the Fed, and guess what? Around 2010, he was against QE. Thought it was dangerous.
Wow. So even within the Fed, there were dissenting voices.
Absolutely. And breaking banks, they reaped this scary moment in 2019, the repo market freeze.
Didn't the Fed have to step in with a huge bailout?
They did, and it sparked this idea of a doom loop. The Fed keeps rescuing Wall Street. Maybe it encourages riskier behavior because they know there's a safety net.
It's a tricky balance, right?
It is, and let's not forget the everyday impact. Breaking banks really drives this home. Savers, retirees, they got hurt by those near-zero rates.
Their savings were earning practically nothing.
And then there's housing. Private equity firms, they used all this cheap debt, thanks to those Fed policies, to buy up tons of homes.
Making it even harder for regular folks to afford a place.
It's a complex picture, but breaking banks makes a powerful statement. They say these Fed policies likely contributed to the growing wealth gap in America.
The top 1%, they hold so much of the stock market, which benefited hugely from QE, while wages for many stayed flat.
It raises some fundamental questions. How much power does the Fed have? Do we need more transparency? And what about their mandate? Are they doing what they were set up to do?
The Gunfighter's Guide goes way back, talking about those early debates in U.S. history. Hamilton versus Jefferson, over the role of a central bank. And then there's President Jackson. He was fiercely against it.
Shows you these debates, they're not new.
Not at all.
So throughout this deep dive, our goal was to get you thinking about these easy money policies. What were the intentions? How do they actually work in the system? And what impact did they have?
Both the intended and the unintended.
Exactly. We're not taking sides here, just laying out the information, the different viewpoints from these sources.
And hopefully giving you the tools to reach your own conclusions.
Couldn't have said it better myself. Before we wrap up, though, quick reminder, if you're craving more on this stuff, head over to our YouTube channel, Facebook, Instagram, we're everywhere.
Always sharing more insights, more discussions.
So as we come up for air from this deep dive into Lords of Easy Money, those reviews, and the Breaking Banks discussions, what really sticks with you? The sheer scale of the Fed's actions, the debates about whether it worked, whether it was fair, or maybe those long-term consequences we talked about.
These sources, they show how much has changed in the American economy. And the Fed, they've had a huge hand in it. It forces us to think beyond the immediate crisis response. What are the lasting effects on wealth, on stability, on the whole financial system?
It's a lot to take in. But understanding these dynamics, as Leonard explains and the reviews highlight, it gives you a new lens to view what's happening today and maybe even anticipate what's coming next.
We encourage you to explore further. Lords of Easy Money is a great starting point. The reviews offer even more depth, and Breaking Banks, those discussions are always insightful.
And of course, for more deep dives like this, check out our YouTube, Facebook, Instagram, TikTok. We're all over the place.
Here's one last thought to chew on. Given all this complexity, all these potential consequences of monetary policy, what role should transparency and open debate play in guiding the Fed's future decisions?
It's something to ponder. Thank you for joining us on the Inspired Podcast. We appreciate you listening.